So the market's very much sideways trading. We had started to see some consistent positive trading last week, not quite so this week. Is Kenya responding to problems domestically or to the fact that the whole world is really worried about what we're seeing unfolding in Europe and possibly even in the United States?
Well, it's very interesting to try and decipher which is which, but either way, at the end of the day, the Kenyan markets really are not performing well at all. On the local front, we have this price control that was really just signed into law last week. Very concerning issue for any investor because it's always a slippery slope. And that aside, the shilling again is losing ground, despite the central bank's big move last week that was expected to try and stabilize the markets. So all in all, we're not particularly sure if it's to do with local concerns or the global market issues that are facing everybody. But it's an element of both at the end of the day.
Your outlook for the shilling, Kimathi, those who've been tracking the currency say by year's end it would have edged higher than what we're seeing at 95.65.
To be honest, the market has already moved towards the 100 shilling psychological mark. And unfortunately, that is the truth of the matter. Looking at it from the spreads, especially the banking spreads, the Forex Bureau spreads, anybody who's had the misfortune of buying dollars or rather hard currency of late is really already has moved towards a higher psychological mark, and that is true of the dollar, especially whereby we are seeing a bank spreads, especially at about 98 shillings to the dollar. And with that kind of scenario, honestly, we are all expecting a slide for the Kenyan shilling. So unfortunately, in my books, it seems as if the central bank's moves are a little bit of too little, too late. So it's likely that that 100 shilling mark to the greenback will be here faster than we hope.
The inflationary risks persist. Obviously, the import bill for Kenya is quite high. A lot of inputs are imported. The shilling is volatile. And other things like electricity costs are said to be now at their highest. The broader impact on the Kenyan economy and the threats to inflation going forward?
The impact on the economy is absolutely disastrous in that now the only positive news we've had on this particular issue is that the foreign remittances have been increasing and rose I think about 53% month on month. That's sorry, year on year for the month of August. And apart from that, we really don't see too much of positive news, and even that could be taken on a negative front in that some begin to question really the use of a lot of the foreign remittances and say that actually that is what spurs forward the inflation aspects and also the shilling downturn. So at the end of the day, inflation definitely is going to increase with the shilling falling further. A lot of companies out there have got quite a bit of debt denominated in hard currency, and with the falling shilling, they have to somehow pass it on towards consumers. So that has the effect of increasing prices, and honestly, inflation-wise, it doesn't look too good.
Let's look at what's happened on the equity side. The leaderboard tells us that Scan Group's done particularly well, gaining 3.7%. But, you know, that's an advertising story that we know of, the services industry doing well. Interestingly for me, British American up 1.8%, and so too Kenya Re. So the insurers seem to be gaining a bit of ground, and that's after people basically said, you know what, not in this market, they're not going to take off.
Well, it's maybe premature to judge British American at this point, though thankfully the slide has kind of at best eased. And looking forward, I hope that it improves much further. For Kenya Re, I'm not particularly sure why we've seen quite some positive gain today, but all in all, the exposure towards the real estate market may be quite an issue of positivity for the reinsurance firms and insurance firms too, in that the growth there, where they have a lot of high exposure, is likely to translate into their books and hopefully translate in their books sooner rather than later, as opposed to, say, the agricultural companies who are over time expecting to move towards that sector of the real estate. So it's likely that that is maybe a big push towards the positivity in the insurance sector.